Good morning, it's Jeffrey Cohen, Chicago Quantum. How are you today? We're an investment advisors representative with US Advanced Computing Infrastructures. We run deep quantitative analyses into the market to give you insights that you wouldn't normally find. And so this is our morning update, stock market update. So, we are in a correction, but yet today the market is green. What you see on your screen to the left are the futures. So you see along the top, equities are green. The Russell right now would be up 1.2%. The NASDAQ 1.4%. The S&P 500 1.1%. You can see that Europe is up. The Nikkei in Japan was up. The VIX is down, which is interesting because that says the cost to insure your portfolio is lower. Now, energy's higher. And we know what that feels like, right? Gasoline's been fluctuating. It's back to $3.86 a gallon wholesale, which means you're going to see over $4 at the pump. 30-year bonds, right? When you see a plus that the bond is worth more, it means that it yields less, so that the interest rates are coming down. Everything except the 2-year. And so that's good for things like mortgages, right? That's good for the stock market. Silver's down slightly. Copper's up slightly. And the US dollar is strong, although we don't see it in the major currency we look at, which is the euro dollar. So euro dollar at 105.85, we've seen that as low as 103.9, and so that's interesting. So we're going to watch the futures while we talk, and we're also going to watch Corbis pre-market, because that's been interesting. So this is where we are in the market. So let's take a look at some of the other things. And so I did a quick capture for you. Let's look at the bond market. So why do we always look at the bond market? Because if you have money, you want some of it to be in that risky equity play where you're going after the riskiest part of a company. But bonds or fixed income are higher up in a priority scale where companies pay back what they owe. And there's 3 different levels. There's investment grade, and these are companies that are considered a good risk by the rating agencies. There's high yield, which are company debt which is not considered worth investing in. They're high risk or in default. And then there's convertible, where the company allows you to convert the bonds, if the stock market does really well, into equities. So how do we do? Advancers, this is yesterday's data. 9,000 issues traded. It was about 2-to-1 advancers to decliners on all issues. A little more than 2-to-1 on investment grade. About 1-to-1, a little less on high yield. So high yield didn't do so well. Convertibles did great, right? So convertibles were 1.5-to-1 advancers decliners. What puzzles us still is 63 new highs, 1,158 new lows. So for debt that is already not doing well, which is already being pushed down in price and the yield's going up, it's getting worse. So companies, I guess, are struggling right now with their debt. And so you just want to think about that. So running to something, we keep going back to the same concept, which is fear of missing out is a cost-effective strategy. If there are stocks that are down, let them stay down. Save your money. Because in a week or two, they may be down further. You see that in the bond market, right? If debt is down, let it stay down. Don't go rushing back into it, because there's many, many more new lows. Debt that is low is continuing to go lower. I think that's important for you. The other thing that would be helpful is to see how is the government market, right? So we look at the yield curve and you see pretty flat. So this is U.S. Treasury bills and bonds and what they pay out in actual yield. So if you were to buy the bond last night at market close, at whatever the price is at market close, because it doesn't always trade at 100 cents on the dollar, In fact, the 30-year bond trades at 141 cents on the dollar. So you'd be earning 3.05%. Now that's been dropping. So long interest rates have been dropping. The 10-year at 284 is about flat. The 5-year at 284 is about flat. So you get the same interest whether you put your money to work for 5 years or 10 years. And you see the 1-month yield has come back up. What's interesting is you're seeing a flattening yield curve. It is starting to flatten a little bit. Doesn't mean anything per se, but it's just interesting that short money is slightly more expensive now. So we cover that every morning. Let's take a look at other futures. So how's crypto? So Bitcoin is at 30,100. That's kind of at that support level. That means Bitcoin's flat. Bitcoin is in the support level. It is trending just where you'd expect it to be. Neither up nor down. It's flat. Trading like General Electric. So I like to look at the news. Let's take a look at the news. So this is FinViz's news. Let's refresh it, right? So not much. The British pound is down because of Brexit concerns. It's not really new news. Foot Locker shares went up. We talked about Foot Locker about a month ago. John Deere beat expectations. President Biden's meeting in South Korea. Record gas prices for this long is unprecedented. Well, we know that because, take a look, your gasoline prices normally float around $2 or less. And since December of 2021, so for 6 months, gas has been up. And so, of course, it's unprecedented. Okay, that's not really news. That's more commentary. I'm not seeing any news. Okay, this I thought was interesting. It's not that interesting. It's politics. I won't talk about it. So let's see. Is there any other news? Let's look at Cohen. We like Cohen. Maybe there's some news here. Gold hits a high. Russia keeps fighting. The Saudi crown prince signals family unity. That's great. Families coming together. I don't know. There's nothing going on in the market, right? So it's Friday, nothing. Just some earnings, right? It's not much. Let's take a look at the factors. So yesterday, growth outperformed value. It's the first time we've seen that in a while. Growth outperformed value. Got it. Also, we looked at industries. Tech was down, consumer staples were down, but materials were up. Healthcare was up a little. So what's interesting about materials being up is that's like core underlying the economy type stuff. All right, let's take a look at, and I already looked at this, but it'll be interesting for you. Let's take a look at where the where stocks in other countries are. So the Hang Seng was up almost 3% last night. India was up. UK was up. Germany was up. Mainland China's up. South Korea's up. France is up. Jakarta's up. Jakarta's always up. We got to take a look at that market. The Nikkei's up. Australia's up. So basically, overnight, everything looked great, actually. We look at commodities, another way to look. All right, fine. Lumber's down. Natural gas is down, which is good for people, right? Coffee's down. I love my coffee. What's interesting is that the Treasury notes, Treasury bond futures are all lower, which means the yields are higher. Price of the bond goes down, yields are up. So yields are up into this Friday. But what you're going to see is the market looks good today. The S&P futures are up over 1%. The Russell's up over 1 1/3. NASDAQ is 1.5. And so futures are higher, right? So take a look. The Russell's up. The NASDAQ futures are up. The S&P 500 futures are up. So it looks like we're going to have an exciting morning. Markets are going to be higher. People probably going to make money today, right? And so yesterday we looked at some stocks. So I want to read out what we saw. I think this is important. So we're not looking at current holdings. That's not what this is about. Let's take a look at our what we call our stonks, right? These are stocks that are down, that are rough, right? And so we looked at some of these stocks. We looked at molecular data at 15 cents, and we said no thank you. It's now at 10 cents. We still say no thank you. We did a deep dive on that stock. What else do we have stored in here? By the way, it's a shame what's happening to Walmart. It was at 160. It's at 120. That is a shame. Birds Global. We looked at this stock, right? This was it's interesting because it was a $10 stock. It's now at 79 cents. Intrinsically, it's still a rough one to look at, right? So I'm not sure. Due diligence said no. Vroom at $1.45. This was also a much higher stock. Our due diligence said no. A lot of stocks that look like they should be like screaming buys because they're down 80-90%. We said no. Now, AutoWeb is interesting. So we invested in AutoWeb before. AutoWeb is something we should take a look at. Party City, we've invested in before. These are both well-run companies, good management teams that are doing the right things. It's just, what a tough market. Big Bear AI. So this one's interesting. So we're going to take a look at this one. I'm going to talk a little bit about the valuation. I'm not going to talk about the valuation of one particular company because YouTube got mad and they made our video private. They said we were violating terms with another stock that we looked at. So we're not going to look at that one. So let's look at AutoWeb. So AutoWeb is worth $8 million. It's a good company. I haven't looked to see if they made a profit or how their last earnings are, but they were a $2 to $3 stock, and you could ride this thing $2 to $3. Look at that; it went almost to $4. It's trading now at 50 cents, 60 cents. So the question is, what happened? This thing is an RSI of 22. It is being dumped. I don't know. It's worth a look. So AutoWeb used to be called Auto Bytel. They run a website and they do advertising for car dealers. So that's interesting. Let's look at Party City. We like Party City. We shop at Party City. We get costumes there. One of my daughters actually worked at Party City for a summer. It was great. Right before Halloween, she actually kept going. After school, she would work there. So, boom, the stock is around $1. Okay, we made money on the stock before. So the question is, are they going to make it? So their RSI has stabilized at around 30. But look at that. They're also just dumping the stock like crazy. Big Bear AI. So Big Bear AI is worth talking about. It's up in pre-market. Let's take a look at shortables. So by the way, we own Corbis. So we're going to take a quick look at Corbis. Yesterday, there was slightly less shorts than longs. So there was but tiny volume. Oh my gosh. So Corbis went to bed hungry. Nothing really happened. There's plenty of stocks. 2.4 million shares of Corbis ready to short. So if the shorters want to come out on Corbis, you are ready to go. The stock isn't going anywhere. BBAI has zero borrow. So by the way, we do like this website, Shortable Stocks. We're not paid by them. We have no affiliation. Just a good website. So yesterday, BBAI was shorted. The day before it was shorted. The day before that it was shorted. 3 days in a row of short volume exceeding long volume. Now, I don't know how they calculate it, but it sure is interesting. And right now, there are 0 shares available to short. So we did some homework on BBAI. We actually read the financial statements, got in deep, right? Now, the funny part is, so did everybody else. And this stock went from 750 to 10. You know, far be it from us to say that you're not going to make a profit here or a loss. But we looked at this stock, and fundamentally, they are not positioned to make a profit structurally. So let me talk about this for a minute. What does Big Bear AI do? They look a lot like us. US Advanced Computing Infrastructure has a DoD gauge code. We are authorized to sell services directly to the Department of Defense, and we welcome the mission of our Defense Department and to help them. We provide analytical services so that people can make better decisions. We use deep analytical models. So does Big Bear AI. Now, they are ahead of us because they now have software to sell. And our software sitting on a server over there, and you couldn't sell that. You couldn't sell that software. It's like it's not hardened, right? So these guys have hardened their software, like half the revenue software, and they sell primarily to the DoD. I want to say like 70% of their employees are cleared. They work in cleared facilities, secret facilities. So we almost bought a building so that we could have a cleared facility. So that we could put cleared, top secret clearance people in the facility and do that work. Love the business. Love the mission. I want you to love that mission too, right? If you ever have a chance to serve our Defense Department, please do it. It's great business, right? But here's the thing. You're selling at a price that is very competitive. So they make gross margins, healthy gross margins. I like the gross margins. But then you have sales, general, and administrative costs. And then you have some other costs. You want to make investments. You want to grow. Well, so here's the thing. Big Bear AI structurally does not make a profit. Not an economic profit. And so you're buying mission. You're not buying profit. You're not buying a growth story. They grew their business. It didn't actually help the profit margin. So I look at Big Bear AI and I think, great mission. Love the mission, guys. Do I have an American flag? I want to wave that flag. Here we go. Big Bear AI, God bless you guys. But you're not making any money. So why is the stock going from 750 to 10? And why is it going from 15 to 750? This is sleepy at best. Well, the reason is what I showed you. There's no shorts. What's going on, right? There's a lot of mismatch. There's a lot of memeing. So this is our meme stock right here. Big Bear AI. If you want to try to play this stock, God bless you. We can't. We're not in that game, right? So that was kind of the lesson learned from our memeing, is that there's one good one out there that at least has a good business, right? Big Bear AI has no shares available to short. Let's take a look in Twitter. So we're going to show you the secret sauce now, right? So we go to Twitter. There's a bunch of stuff here. It doesn't matter. Let me hide it all, remove it all. Let's just look for Big Bear AI. So the first thing I'm going to do is search Twitter for Big Bear AI. And then we're going to search it for $ BBAI. And then we're going to search hashtag BBAI. Get rid of the other stuff. None of this matters. I watch the Twitter feeds, and 99% of what I see is completely useless. In fact, we put some of that completely useless garbage out there. I apologize if you don't like it. I do my best. I try to have some insight, right? I share information. I do my best, I promise. But let's take a look at Big Bear AI. So, Tony Barnett has been promoted. That's great. Okay. Low float. De-SPAC play. Up in the last few days. So, lot of movement here. Look at that. 3 minutes, 3 minutes. 5 minutes, 16 minutes. Now, you got to have the picture, right? Because you can't have a meme stock without memes. So there's the sad-looking guy. By the way, when I've worked like in Fort Meade, you don't see a lot of sad guys. You see a lot of guys and gals in uniform. People in uniform, right? So you've seen this chart. Flat because it's SPAC'd. Went down to 5. Went up to 15. Went down to 750. Went up to 10. Where's it going next? A lot of excitement, right? Just sharing that. But you see a lot of tweets, 3 minutes, 6 minutes. So what's happening is you get a lot of motion, right? So now the question is, do you want in on it? There's nothing to short. You can't short this. If you don't think it's worth 1030 or 970, you can't do anything about it. If you have the shares, you can sell them. But you can't do anything. So that's interesting. That's what we learned from the whole memeing thing that we watched. So where do I leave you today? What do you do in a market like today? Well, what I would do is I would take a look at, there's actually a lot of data I can share you. If you're interested, are you guys out there, are you interested? Because I'll share with you like real picks. Yeah, let's do that. Enough of this market stuff. Let's take a look at, what did we find? We ran our models for hours yesterday. Let's show you some real data. And don't take a bunch of screenshots and everything. Come on. There's stuff to share with you. I can do this. This is nice. Excuse me. All right. First thing I want to show you is the variance of the S&P 500 continues its relentless climb higher. So one, actually, no, that's lower. Oh yeah, no it isn't, that's higher. That's higher. This was 1.1 forever. It's 1.25 times 10 to the negative 4. The variance of the S&P 500 is higher. So Jeff, what does that look like? I'm pulling over. I'm looking over there because I'm gonna pull up a. I'm gonna pull up a chart. I'm gonna pull it into the screen for you. So Jeffrey, what do you mean the variance is higher? None of this makes any sense. When you talk, Jeff, I don't get it. How can the variance be higher? So I'm going to show you something. What's the right way to show you? I don't care about RSI. I don't care about MACD. I don't even care about volume. Let's just look at this. And the bars, yeah, it's worth looking at. It's worth looking at. So when you watch the market going up, it goes straight up. Straight up. Let's draw that line. Now, it's not perfectly straight, but it's pretty darn close. And you don't see a lot of movements off that line. You see a couple little blips, because blips are normal, right? Somebody gets a big inheritance, they put the money in the market. A money manager opens up a new fund. Christmas bonuses. People start to save. Stimulus checks, whatever it is, right? But then what happens is the market comes down, and there's a saying, the stock markets, they climb the stairs when they go up. And you can see that. It's a relentless climb with little hiccups, but they take the elevator when they go down. Love that expression. Stocks take the stairs when they go up, they take the elevator when they come down. Now let's take a look. So you see how furious this move down was, and then it pops back up, and then it comes down again. then it pops back up, and then it comes down again. So I look at this market and I think, this is not so simple. There's a lot of variance. There's a lot of movement. There's a lot of unnecessary movement. If you want to go down to 3,900, just go down to 3,900. You could go down 50 points a day, 1% a day, from 4,800 to 3,900, or you can even go down 0.25% a day. It's just, everyone's like, all right, the market's worth a little less today, but in fact, it's up and down, up and down. That volatility, that variance, is very damaging for liquidity, because what happens is people make bets. They make bets, they lose a ton of money, they make a ton of money, they have to redeploy money, they pay tax on that money, all kinds of things going on. It's nice when it's steady eddy. Steady, low variance. 1.1 times 10 to the negative 4. Drop. This whole thing now is 1.25 times 10 to the negative 4. If you have a year with it looking like this, that's probably going to be like 2.0 times 10 to the negative 4. So that variance is high. We want to share that with you, right? Because all your options bets are going to be more expensive now. Things are going to be a little crazier, right? So now let's look at something else. Let's look at the actual returns of the market. Plus, I'm giving you some inside baseball here. This is how we model our floors. So the actual QQQ, this is, I should actually add this to the run. It excludes dividends. Okay. So the actual QQQ return, it's down 10% just on a straight average. So just remember, guys, a year ago, the QQQ was 321. It was 289 at the close. It's up now, which is great. Friday, it's up. Everyone's making money, going to margaritas after. IWM is down 18.39%. The S&P 500 is down 4%. The S&P 500 is like a magic index. It has low variance, low volatility. It just has all the right stuff. It's a good index. It's a nice index. So we changed our model a little bit last night. We decided that in a down market, in a crazy market, you have to go actually further into your fundamentals. You have to get your list of stocks. You have to do fundamental research. You have to read. You have to read the quarterlies. Read the 10Ks. Read all the announcements. Read the press releases. You have to. No one's going to do it for you, right? By the way, I'm going to show you my 3 favorite words on Google. Well, Jeff, what's that? It better not be something weird. My 3 favorite words on Google. SEC. Edgar. Search. Company search page. Here it is. My favorite thing in the whole thing. So let's take a look at a stock that we talked about. Big Bear AI. So you see what happens is it lets you choose, right? Now they've got warrants, they've got stocks. So they have updated their, this is a great document, by the way. This is where they register their securities. So if you want to know like anything about the securities of this business, you would look at that. It gets updated all the time. They keep it very current. And then you can look at the 10Q, which we did last night. We spent a lot of time reading it. By the way, you can call them if you want. They're on Benjamin Franklin Drive in Columbia, Maryland. Yeah, about that. That's right off the GW Parkway, isn't it? I like that place, actually. It's a good place. It's good people out there. Cash, 60 million bucks. All right. Total current assets is about 100 million. You add in goodwill, you're at like, and other crap, you're at like 271. But call it $100 million of tangible assets. Their liabilities are 30. They're not going anywhere. But they owe $190 billion. You got to pay that back. Why would you do that? $190 million of debt. So at first I was happy, right? Yeah, you got $100 million of assets plus a bunch of goodwill and intangibles, which don't really count. So I got $100 million. I owe 30 this year, but I owe another 200 and I owe 190. So I'm a little nervous now. Guys, I don't like that story. Okay, keep going. Keep going. That's not enough. Let's look at revenues. Oh, for the 3 months, revenues are up a whopping $1 million this quarter, approximately. But the gross margin went down because costs went up. Because let's be honest, who's paying less for their employees? Who's paying less for hardware, for power, for gasoline, for expenses, for office space? So let's look at SG&A. Now, this isn't a fair comparison. It went from 10 to 22. It's probably like 10 to 12, but they went public. They have to do things to be a public company. That's weird. And R&D went up, which is totally cool. So they lose money. They lose money even when they don't have a public company infrastructure. Plus, the number of shares went up from a year ago to now. So I'm nervous. That's all you really need to know is, I mean, they're going to have to double revenue to kind of outgrow the SG&A. Are they really going to do it? I don't know. I don't know that I buy that story. That's just quick R&D. So now, there is 1,103 of these finely tuned, fundamentally sound companies. No, this is the down run. This is crap. This is down run. This is 1,103 down stocks that lost money. Okay? Their variance, by the way, is 4.2 times 10 to the negative 4. Remember, the S&P 500 is 1.25. This is 4.2. So this is 3 to 4 times worse. Variance. If you were to just invest in the money losers, the dogs. I know a lot of people out there like to look at negative beta. If you want to be invested in negative beta, there's synthetic negative beta all over the place. There's the VIXI, there's the UVIXI, there's the UUP, there's the SQQQ, and there's the AAAU. If you want negative beta, if that's your thing, do it. There's one stock that lost money that has true negative beta against the S&P 500 for a year. It's BKEP. I don't know anything about BKEP. Let's take a look. I don't even know what they do. Blue Knight Energy Partners. Oh, this is why. This is why. Take a look at that gap up. You probably can't see that. They gapped up. That gave them negative beta. It's just a one-day move. It's an anomaly. Can you say it, Jeff? Anomaly. It's not negative beta all the time. It's negative beta because of one day. All right, let's get back to business here. Throw that off stage. All right, these are the up runs. 100 million cap. We tightened up validation. We tightened up some of the fundamentals. You have 2,207 companies. The variance of this portfolio of 2,207 companies all held together is actually approaching the S&P 500, which is great. It's 1.37 times 10 to the negative 4. It's close. That's cool. By the way, the accuracy of our model, or the precision of our model, is 5.4 times 10 to the negative 20. It's pretty accurate today. So some people like stocks that went down in price. FSRD is down 93%. So if you like that kind of thing, take a look. FSRD. These are all down dogs. Profitable, but down. By the way, some of these stocks we are going to be looking at today. There's some pretty interesting stocks that have dropped dramatically but are profitable. These are leptokurtic stocks with low variance. These are stocks that have, generally speaking, low options prices. These are platykurtic with high variance. These are stocks that tend to have high options prices and have earned the right to those high options prices because they move and they're unpredictable. And these are the 3 best portfolios today if the stock market's going up. So if you put your money in these stocks, the odds are you're going to do great. This is the inside baseball. You have 5 minutes to get into these stocks. If you were a client of ours, you would have had this either first thing in the morning, 6 in the morning, or you might have even had it last night. You can hold either of these portfolios. They all have a 5.6 time edge over the market. And so I want to thank you for listening. I'm going to leave this up there. You've got 4 minutes to buy those stocks. These are the stocks that outperform when the market's going up. So let's take a look. Let's just go back and finish with, where's the futures, Jeff? Jeff, tell me the future. What is my future? Well, I don't know your future. But I can tell you what the market says the stock market future is. The S&P 500 is going to open up 1%. The Russell's going to open up 1.1%. The NASDAQ's going to open up 1.3%. You're going to do great today. You're going to make money, right? If you're long in the market, the VIX is down. There's less fear. Interest rates, bonds are up, rates are down. Feels pretty good. The dollar's up. That should worry you a little bit. And so, have a great day in the market. Again, I'm going to flash those stocks that if you wanted to take advantage of our model, these are the stocks. These 3 portfolios would be evenly held. They all have a 5.6 times edge on the market. Have a great day today. You take care. By the way, if you like the video and you watch this long, leave a comment below. Love when you do that. I'll respond to your comments. And hit the red subscribe button. Really helps us. We are not paid to make these videos. We're just doing it to craft our own messages to improve our game so we can serve you better. Thanks so much. Bye-bye now.